Monday, October 4th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at government intervention in the economy. We've had that in spades, especially since last year, but we've had it in spades for about 100 years, especially in Europe and in the UK. In the US, it's been a bit more since, let's say, the 60s, 1960s, but it's gotten worse. It always has the opposite effect. And why is that? Well, because governments are monopolies, they're centralized, they're inefficient, they're wasteful, they're also corrupt in many instances. It's very centralized, and it disrupts the market, the free market, and it disrupts the economy. And all it does is transfer wealth from one sector to the other, and at the end, it just damages the economy even further. And this process has been getting worse, especially since last year, when governments intervened in the economy by locking the economy down and then by stimulating it massively with fiscal measures, with monetary measures. And now we're seeing that the impact on the economies has been horrible. We've got all the supply shortages, we've got all the rising prices. This is not the fault of the free market, it's the fault of interventionism. And the reason why I'm talking about this today is because I fear, not just for the UK economy, but I am in the UK, so I'm going to cover that, the UK here, but it's applicable to economies all around the world, especially in the West, in the US. But right now, we've been told that the government is going to help out the UK workforce by pledging 500 million to help the UK workforce. It's a joke. It's going to make it even worse. The best thing governments can do is to leave everyone alone, tax people less. I mean, if they wanted to help the UK workforce, they wouldn't have increased national insurance tax in the last budget, which is increasing as of April. And yes, has anything improved since last year, since the massive trillions of dollars and pounds that have been created to help and to intervene in the economy? No, it's gotten worse. And I always like to go back to Dr. Ron Paul. I met him at the Mises Institute in Auburn, Alabama in 2002. I went with my wife for the 20th anniversary of the Mises Institute, which is really the premier institute for learning the Austrian School of Economics. And I had the chance to have a chat with him as over there, but I remember in one of the lectures, he told us one of this story about the district that he was elected for in Texas, because people always found it strange. How could you convince an agrarian district that's based on agriculture and also fishing? How did you convince them that they didn't need help from Washington, D.C.? And his answer was, well, it was very simple. I asked my voters, my constituency has all the help since the New Deal helped the economy of this area, and they all said no. And that's why Ron Paul was known as Mr. No. He voted against all government intervention, all government spending plans, and yeah, and that's what we need. Unfortunately, we're going the wrong direction, and it's going to make it even worse. Yes, the reason that they give to the public and the mainstream media and the mainstream economists is that we have to protect the public. So I'm going to reference Human Action by Ludwig von Mises. Ludwig von Mises, of course, they named the Mises Institute in Auburn, Alabama after him. And he has a chapter here about interventionism, the crisis of interventionism, the harvest of interventionism, the exhaustion of the reserve fund, and how it always fails, interventionism, because it leads to socialism. And socialism always fails because it's a centralized system that kills the market. And if you don't have a functioning, properly functioning market, you can't allocate resources, services, labor properly. And that's what we're seeing now. This is a culmination of the interventionism. And I'm not going to go through this whole chapter, even though it's not a long chapter. He says, though, that in the beginning, they go after the very wealthy. They think that just by transferring their funds to the general public, everything will be fine. But then he talks about the fact that once they've gone through the wealthy's savings, they will go after the workers themselves because they're going to run out of funds from the very wealthy. And the very wealthy, of course, right now know how to protect their wealth. They leave it all offshore. So now we're seeing workers getting punished here in the UK. We're seeing the average person getting punished. Am I saying they should keep punishing the wealthy? No. I think government should be minimal. And just to show you, give you some numbers, an example of what I'm talking about, why I said interventionism has gotten worse in the last 100 years or so. If you go here to this Wikipedia page about government spending as a percentage of GDP, look at how in the United Kingdom and in the US, government spending was almost always below 10% of GDP up until 1920, as you can see there. The United States was even lower. The first time it actually got above 10% of GDP was in the 1950s. Europe, unfortunately, we've been going towards more government intervention earlier than the United States. You can see the UK got up to 20% already after World War I. Let's have a look at France. France has 62.4% of government spending as a percentage of GDP. It's crazy. Is it any wonder that the French economy is not doing well and people are unhappy in that country? We've had the yellow vest for the last few years. Well, it's because the government is too big. But unfortunately, a lot of people in France that are hurt by this policy, they want more intervention because they haven't read about the Austrian school, the free market, and how intervention actually destroys the economy. But even France, in the 1800s, it was below 15%, but it was still relatively high compared to the US in the 1800s, early 1900s. Is it any wonder that the United States economy did so well towards the end of the 19th century, beginning of the 20th century? Let's have a look at some other countries here. Germany as well, pretty high there, even in the 1800s. And it's gotten worse, of course, as the last 100 years have gone by. We're now at 51% of GDP, government spending. So, yeah, that's what von Mises says here, that once they exhaust the funds of the very wealthy, they'll go after the public. And the other thing he says here that makes a lot of sense, and I think this is where we are right now, we're seeing the total destruction of the economy, and the symptoms are all out there for those to see. We don't have enough lorry drivers or truck drivers. We got supply chain disruptions, everything. It's all getting worse, and it's going to get worse because you look at in the US, they're trying to pass even more intervention. What do you think the infrastructure and reconciliation bill are all about? It's about more government intervention. It will have the complete opposite impact on the economy. It will destroy it even more. So he says here on page 858, which I thought was very interesting, an essential point in the social philosophy of interventionism is the existence of an inexhaustible fund which can be squeezed forever. Well, especially nowadays with the funny fiat currency that they can just conjure up out of thin air, but even that is coming to an abrupt halt in terms of the fact that it's becoming worth less and less. The whole system of interventionism collapses when this fountain is drained off. The Santa Claus principle liquidates itself. So I think, is it any wonder that they're talking here in the UK about Christmas being a difficult time this year? You won't be able to get everything you want. I'm not surprised. And the more people like Janet Yellen or Richie Sunak, Richie Sunak is the Treasury Secretary equivalent here in the UK, or any other Treasury Secretary, Finance Minister, anywhere around the world, the more they do to help workers, the economy, intervene, the worse it's gonna get. And yeah, so how do we fight that? Well, we need to make sure we don't buy into the interventionism. We need to make sure that we warn people about interventionism. And if they say, oh, well, it's to help the average person because business people are too greedy, corporations are too greedy, and I'm not saying that some corporations aren't greedy and that some corporations haven't joined up, with the government to exploit the general public. But one question you need to tell these people that they need to ask: have things improved with all the interventionism, especially since last year when they threw all this stimulus at us, all the stimulus checks, all the furlough, all the loans, special loans to small businesses, everything. It hasn't, because now Sunak, part of this pledge of 500 million is to help people get back to work for a program that he himself created. And notice that it's a pledge. Is the money really there? Probably not. 500 million. Of course it's not there. It's fiat currency. It's funny money. Real money, of course, as Rafi Faber has noted. And there's a shortage of real money. There's plenty of the confetti money. Real money, of course, are gold and silver. So with that, let's quickly look at where the markets are this morning. It's 20 to 9 a.m. London time. So we've got spot gold at 1754.80. It's down just over $5. We're right near the lows here of the overnight session. London has just started trading here. Europe, the high has been 1766 overnight, and the low 1752.85. Silver's down 4 cents at 22.48. High has been 22.80 and the low 22.42. The Dow futures down 200 points, or just over 0.5%. Nasdaq future is down 0.8%, or 120 points. S&P futures is down 28, or 0.2%. The FTSE is down 7 points, just above 7,000. To the currencies now, we've got sterling slightly higher this morning at 135.50. We've got the euro higher as well, about 0.1 of a percent at 116.01. The dollar is unchanged versus the yen at 111.11, all ones. The dollar is up 0.25% versus the yuan at 645.22. Aussie dollar is down 0.1 at 72.55. And the US dollar is unchanged versus the Canadian dollar at 126.41. The Kiwi dollar is up slightly versus the dollar at 69.36. To the general commodities, we've got WTI crude down 0.2% at 75.25. High-grade copper is up 0.2% at 418.50. Natural gas is up almost 3% at 579. And to finish off, let's have a look at the 10-year yield. 10-year yield is unchanged at 1.47%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.